Up now, Forum Daily's crypto update with Catherine Murray.
Hello, everyone, and welcome to your weekly crypto and digital asset update. I'm Catherine Murray. We are seeing cryptocurrencies rally. Bitcoin's up by about 8% today and has been up by about 25% over the past week and 50% on a year-to-date basis. Of course, the recent move higher, pushing Bitcoin above that $26,000 mark, really has to do with the bankruptcy of the Silicon Valley Bank and what the Fed may or may not do next. So let's just kind of recap here a little bit for a moment in terms of this renewed interest in cryptocurrencies. With respect to SVB, Silicon Valley Bank, there was a run on the bank. They had significant unrealized losses that they then took a loss on and tried to raise capital. That did not work. People got spooked. There was a run on the bank. And a week ago today, the FDIC had to come in and rescue the bank, as well as potentially the depositors, which they did in fact do on the Sunday following last Friday. That's important because there's so much concern in the market as it relates to your deposits and the uninsured portion of your deposits in the United States. They only insure $250,000. In Canada, it's $100,000. So anything above that is uninsured and you're at risk. But the FDIC, as we know, did come in and say we will make everybody whole. But there's still, of course, concerns as it relates to your money at regional banks. Again, that is one of the key reasons why investors have taken another look at cryptocurrency, looking at it as potentially a store of value, more safe, perhaps, to some people than banks. And in fact, there's been a huge amount of searches on the internet for Bitcoin. Again, people kind of re-looking at this as an asset class, and again, also a store of value. One of the other key reasons also why we're seeing a renewed interest in cryptocurrencies is what the Fed may or may not do as it relates to raising rates. They are going to be meeting next week. Prior to the bank collapses, we had expectations that they would raise by 50 basis points to combat inflation. But we have seen inflation pull back a little bit. And what's so key and critical as well is that we are witnessing perhaps the tightening effect, the very aggressive tightening that the Fed has implemented within the financial system, the banking system, which led to unrealized losses for some banks, depending on what assets they bought. And in the case of SVB, they went long duration, so long bonds. When interest rates rise, the value of those bonds decline. And so now investors are believing that the Fed has been too aggressive. This is one of the cracks in the system that we have now witnessed and seen. And therefore, next week, we won't get a 50 basis point cut. Maybe it's 25 basis points or maybe no cut at all. Again, with respect to the value of your dollars and a government really kind of controlling in many ways the value of your assets. Again, people are a little bit more interested to take a look at another asset class, and that, of course, would be cryptocurrency, blockchain as well. So a lot going on within the space in terms of the drivers to the high side. I'd also just highlight one fallout from SVB, Circle, which has a stablecoin USDC, which is a stablecoin is meant to be pegged to the US dollar. But their stablecoin fell in value because they had $3.3 billion at SVB a week ago Friday when the FDIC had to come in and seize the bank's assets. So again, just one of the companies that has been in the headlines and the news as it relates to the fallout from SVB. Away from that, I would just also point out that that Meta, switching focus here a little bit, Meta, which of course is the parent of Facebook, rolled out support for creators to share NFTs on Instagram and Facebook a year ago. But just given the pressure that we've seen to the downside in 2022 on crypto, the fallout of FTX, remember FTX? We haven't talked about that in a while, just given the focus on the banks. And now the collapse with the banks and then some of the crypto firms like a Circle that have been held up within this, they are now rolling that back. They are now cutting off that support for NFT creators on their platforms, Facebook as well as Instagram. In terms of asset managers, though, still pushing into the space, very well known asset manager Brevan Howard is continuing to push into the digital asset space. And in fact, they are taking over a long short hedge fund, which is run by Dragonfly Capital, which is a crypto investment firm. So still some move into the space from traditional asset managers. So in other words, they're not backing off, just given the concern of crypto in 2022. And again, this renewed interest in 2023 is quite interesting. Lastly, just to kind of wrap up the latest with FTX, their debtors have filed a schedule of assets and liabilities, and it shows that $3.2 billion in payments and loans were made to its founders from Alameda Research. And in fact, that included $2.2 billion to Sam Bankman-Fried. And that also all those payments actually exclude about $240 million spent on luxury properties in the Bahamas and also, of course, political donations.